All right, let's head to another conversation now. We see Africa, crypto in Africa is a dynamic frontier for digital asset adoption, with countries like Nigeria, South Africa, and Kenya leading in crypto usage despite varying regulatory approaches, while some nations embrace innovation to foster financial inclusion and cross-border payments. Others, they impose strict bans due to concerns over monetary sovereignty, fraud, and financial stability. Recently, Yellow Card, Africa's first licensed stablecoin payment orchestrator, released its regulatory report, breaking down the data trends and regulatory shifts. Join us to discuss now. We have Craig Stower, the General Counsel at Yellow Card. Great to have you on the show.
Thanks for having me again.
So tell me, Craig, what were the key takeaways for you from this report?
I think the key takeaway for me is really the speed at which many countries across Africa are moving to regulate the digital asset space, right? I think a couple of years ago, we had a handful of jurisdictions that actually had some type of regulations or were moving forward. And now we have, almost several dozen who have either implemented regulatory frameworks or are introducing legislation or regulations.
In your view, how can regulators balance, consumer protection when it comes to AML, KYC, travel rules, and, fostering innovation in fintech hubs like Kenya and Ghana, where digital assets are rapidly evolving?
Yeah, I think we're seeing a lot of that. Regulators are moving to, I would say, look, their number one objective is to protect consumers, right? And to create a level playing field. And also, of course, they're concerned with money laundering, terrorism financing, things like that. And by implementing regulations, they can help achieve those objectives.
And we know South Africa, they've implemented licensing requirements for, crypto asset service providers as a CASP, and enforce the FATF aligned directives. What are the pros and cons of this rigorous licensing model, compared to lighter touch regimes under the development elsewhere?
Yeah, I would say, South Africa is somewhat unique in that they took an existing regulatory regime for financial services providers, and they added crypto asset service providers like Yellow Card to that regime, which I think is it basically keeps in place what's there. Other jurisdictions have developed kind of their own regulatory regimes, which in many cases have been good, but as you progress, you see that some things maybe are missed. I mean, even in Europe, right, the MiCA regulation missed the payments aspect of crypto assets. So look, everyone has their own approach based upon their own objectives and what they're trying to do. I think the important thing is that people are taking action, they're doing something, and of course, as with any legislation, right, things are amended and developed over time depending on how things work.
All right, then definitely we can't have this conversation without stable coins. They're playing an increasingly central role, across Africa, helping navigate local currency volatility. But how can the central banks and regulators support these solutions while ensuring that they're well managed and aligned with monetary frameworks?
Yeah, I think so. Stable coins obviously are digital assets, cryptocurrency. In many regimes, they're incorporated indirectly. I think to some extent, right, if you look at what's happened, at least with the Senate passing the Genius Act and now going to the House, you've seen that a stablecoin regime is a little bit different and maybe should be treated differently. And I note that your Securities and Exchange Commission announced yesterday, I think, that they're looking at developing a separate regime for stablecoins. So I think that's important. I think the other thing I would note is that across the continent, digital assets or stablecoins aren't incorporated into the foreign exchange regulations. So certainly the framework is there. If central banks want to incorporate stablecoins, I think they could do that quite easily.
And looking at it from a regional level now, we see Kenya, Tanzania, and Ghana, and others advancing regulations at different paces. How important is regional harmonization, especially under frameworks like AFCFTA to avoid, fragmentation and, somewhat promote cross-border crypto use?
No, I mean, that's an excellent question. I think it would be very important, right? It's difficult to harmonize legislation unless perhaps you're in a regional monetary union like UMOA or CMAC. But I think it's important that, and I know that regulators do this, they share intelligence, developments, insights, and to the extent that they can, keep coordinating, you end up with maybe not harmonized, so to speak, but at least regulations that are similar, because that's one of the things that makes it difficult for people to operate in the space and really give the best service to their business and individual customers is when you do have kind of fragmented regulatory regimes. You have to do different things in different markets. Makes it difficult to operate a global business.
So, given, ongoing legal uncertainty in countries like Nigeria, what enforcement or supervisory, mechanisms are essential, to monitor digital asset reforms and manage systemic risk, such as fraud, illicit finance, or capital flight?
Yeah, so I think those institutions and those frameworks for managing that type of thing is already there, right? If you talk about money laundering, for instance, in the traditional financial system, I think there's $2 trillion a year that is estimated to have been involved in illicit activity. So in Nigeria, for example, you have the EFCC, you have the NFIU, you have SCUML. And I think the thing to do is if you make people engaging in the virtual asset space, like we are, and some countries have done, you require them to register, you require them to report on suspicious transactions, and you work with them to achieve your objectives when it comes to trying to stamp out money laundering, terrorism financing, and fraud schemes that are perpetrated upon consumers.
All right, thank you so much. Let's leave it there now. Craig Stower, General Counsel at Yellow Card. Thank you so much for joining us today.
All right, thanks, Lottie. Good to see you.
All right, we'll keep keeping a tab there on how regulation is playing out in most African countries. But let's get a quick check on what's happening with the markets there. We're seeing Bitcoin there holding $104,000 back in the green at this point from the big sell-off saw yesterday. Dominance sitting at 2.80%. XRP is also in the green, and a couple of major altcoins in the red there. Some major headlines now. We see South Korea's financial regulator. They're planning to investigate transaction fees charged by domestic cryptocurrency exchanges, aiming to reduce trading costs for users. And that's according to local media there. South Korea's Financial Services Commission will launch a probe into transaction fees imposed by local trading platforms and review potential intervening measures. Then we see the U.S. there. The Department of Justice, the DOJ, filed a civil forfeiture complaint against more than $225 million in cryptocurrency, alleging the funds are connected to a widespread cryptocurrency investment fraud scheme. Then you see the Securities and Exchange Commission here. They're warning against the public against investing in Zuga Coin and Samzuga GPT. In a statement issued there, the commission flagged the duo as unauthorized crypto assets, adding that the promoters or issuers of Zuga Coin and Samzuga GPT were not registered to operate in any capacity in the Nigerian capital market.